You're welcome to this session. This is the part three of the Forex for beginners. We've tried to make it as simple as possible to make every beginner to understand how to trade this market. If you are yet to watch the part one and two, I will advise get the part one and the part two so that you will understand what we call the fundamental analysis. Have your paper and your pen. Make sure you jot. If you need to watch it again to understand some of these things, please do watch again. Also, don't forget to subscribe on the channel, like and share. Most especially, we would like to read your comments at the comment section. Thank you. It's your friend and partner, Olushola Kupola. Have a great listening.
All right, you're welcome once again. This is the third video in the series of introduction to Forex and the capital market. Just like I said, the tools and things you're going to learn on this call, you'll be able to use it for the Forex market, for the stock market, for crypto and commodities and the likes like that. So pay attention. If you've not gone through the first and the second video, it is important that you go through these videos and these lessons before coming into the third lesson. So be aware that we have two lessons preceding this one. So you should be able to go over it before coming into this session. In this session, we'll be looking at the directional movements system. We'll be looking more at what we call the technical analysis. In the last lecture, we rounded up with fundamental analysis. What are the things that makes up the fundamental analysis? We said three things, two major factors analysis that drives this market. We have the fundamental analysis and we have the technical analysis. And today we'll be looking at the technical analysis. And the basic things that are the basic components of the technical analysis, we'll be looking at the directional movement system, candlestick patterns, exponential moving average, stochastic, moving average, convergence, divergence, relative strength index, parabolic SAR. Now, these are just a few amongst many other technical indicators, we call them indicators, that we use in trading. But we picked these because once you understand the workings of these few ones, the same knowledge you can apply to other indicators for those people that would love to trade with indicators. So, and these are indicators that you can go ahead to start using almost immediately. We're not going to be touching money management in this lecture because of time. We'll just focus on the technical analysis. Now, basic thing in technical analysis, one of the things that the areas we need to get cleared first in technical analysis is what we call the candlestick. The candlestick. Now, you must have been hearing candlestick pattern, candlestick. What kind of candles are they? The candles we use in the house? No, this was formed by the Japanese, so we call it the Japanese candlestick. This is what is used in the market to measure the price movement. As prices are moving, they are measured by the movement of these candles. Now, we have the bullish candlestick and we have the bearish candlestick. The bullish candlestick is the one that tends upward. When price is going up, that is the bullish candlestick. And when price is going downwards, this is what we call the bearish candlestick. And each candlestick that you see like this has specific things, has some interpretation to it. Some people use only these candlesticks to trade without any other indicator. So candlesticks charts convey information pertaining to price actions or the movement of one equity or index price over a specified period of time. Each candlestick contains four attributes. Please note this. Each candlestick contains four attributes. The first one, the opening price of the equity at the time the candle opened. We have the opening price, you will see it on the candle. Then we have the closing price. Then we have the high of the time frame, and we have the low of the time frame. So on a daily chart, each candle represents 24 hours. Let's go do something. I'm going to take us to this chart here. I want you to see this. This is the practical thing here. Now, it doesn't matter what the color is. You can decide to change the color of your candle. You know, if I'm still going to talk about the MT4 platform, but we want to talk about candlesticks first. So here we have a candle here. So I can decide to change the colors of this. I just do a right click on my chart. I go to properties. Let's make it more colorful so that it will be, it will be easy to understand. So here, let me quickly just change this bar up, green, bar down. Let me put this one to red. I'm sure that's what you used to. You see something green and red. Sometimes you see blue. Bar down is, let me put it here. This lime green. Then, no, bar down. Bar down is red. Is red. Is red. Okay. Then candle back, bull candle, the bull candle. Let's make it green. And the bear candle, let's make this red. All right. Just pay attention here. I did this by right clicking on my system, all right, on the platform. All right. I think this one looks more appealing, right? So I'm going to close this and then let's look at this. Now, each of these candles, the way you see them, they represent price action over a period of time. Now, look at this. If you look at the top here, look at this top here, where my cursor is, you can see M1, M5. This M1 means 1 minute candle. So if I click on it, it means that each of these candles took 1 minute to form. Let's watch this. If you watch this, in the next 1 minute, you see that it's going to change. Price is moving within. Look at price is kind of going up here. Can you see it, the way it's moving? After 1 minute, can you see that another candle has formed? Another candle has formed. And so it's forming all through the day. So that means from the open, from the top to the bottom, here is 1 minute. So I can take another one. If I click on 5 minutes, that means 5 minutes candle. 5 minutes means combining 1 minute together. If I combine this 1 minute candle, so if I take 1, 2, 3, 4, 5, these 5 candles are the ones that form this one candle in the 5 minutes region. So if I'm looking at the 15 minutes candle, how many 5 minutes can I find in 15 minutes? That's about 3, all right? So 1, 2, 3. These 3, let's because this one is still forming. 1, 2, 3. These 3 candles, these 3 5 minutes candles form the 15 minutes candle. Let's click on the 15 minutes. So that means each of these candles took 15 minutes to form. Each of them took 15 minutes. Now, when you take 2 15 minutes candle, 1, 2, let's take this 1 and 2, 1 and 2. So the two of them, 15 minutes, will give us 30 minutes. 30 minutes candle. So you have your 30 minutes candle. And so on like that. So up to 1 hour. So when you begin to hear people say multi-time frame, MTF, when you hear MTF, what it just means is multi-time frame analysis. That means you do your analysis over different time frame. So how did this candle form? This candle formed because some 1 minute, 61 minutes candle gather themselves together, 5 minutes candle, and so on like that. Up to the daily. On the daily, which is what I want to use now, on the daily, you see this thing, you see this candle here, this candle, this particular last one now. Let's go to the hourly. Let's go to the hourly. If you count from the top here, let's take this 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22. 2 more candles, 23, 24. Remember, I told you that market, like this market opened 10 p.m. yesterday. It opened by 10 p.m. yesterday. So between that 10 p.m. and 10 p.m. tonight, that's about 24 candles, 24 1 hour candles. If I go to the 4 hours candle, how many hours, how many what do we call it? How many 4 hours can we get in one day? That is about 6. So if you look at, we have 1, 2, 3. Maybe we have 1, 2, 3, 4, 5, 6. This could be the last 4-hour candle forming for the day, the last 1-hour candle. So when we talk about the daily candle now, so all those things you saw in 1 hour, all those candles, the activities of those candles in 1 hour is what formed this one day. So this is a day's candle. So this candle now, let's look. What can we read from this candle? What are the things we can read from this candle? Every candle has, we said each candle has 4 components. Each candle has 4 components. Now, what are these components? One, we talk about the opening price of the candle. The opening price of the candle. Now, where is the opening price? Now, you want to look at something. When you see a green candle, when you see, excuse me, when you see a green candle like this, which is bullish. Now, remember, it could be any color. I can decide to change this one to red and a diamond, or just any color, my friend. All I know is that this particular color is going up. I can decide to change to white and black, and I can decide to change my background. Do you understand? So whichever one you want to do. Now, look at this. Take this particular candle. Let me see to bring my pen here. Okay. All right. When you look at a candle, look at this. There's a candlestick. Just, at least you've seen it the way it is on the chart. Now, let's try to analyze each candle. Now, when it is a downward, a bearish candle, if it's a bearish candle, that means the price went down. The price went down. How do you identify it on the candle? This small line here, this line here on top of the candle is called the wick of the candle, the wick. This is the wick, W-I-C-K. Then you call this one the body of the candle, the body of the candle. And then you see another wick here, another wick. Now, when price opens for a bearish market, the opening price is at the top, while the closing price of that candle is at the close of the body of the candle. The opening price is the top of the body of the candle, while the lower part of the body of the candle is the closing price. All right. Now, in the course of the day, price has gone up, down, up, down. At a point, price went up to this level. When it gets to this level, this place is termed the highest price for the day. And it might have gone down to this level. This place is known as the lowest price of the day. So within this one candle, guys, there has been a lot of money that has been made and a lot of losses that has been made also within this just one candle. Now, I'm going to let's look at something again. Let's look at something. Look at this. You see, this, let's use the maybe 5 minutes candle. You can see something here. You see, when this price opened, when the market, look at this candle, when this candle closed, remember, I said when it closes, when the closing is below, it is a bearish candle. Let's do it. I'm trying to see a way to really make it simple for you here. All right. Okay. Let's take this. Let's take this. Let's take this one. This is a very good one. The price of the candle opened here. The price of the market, I mean, opened at this place. I need you to just get this. If you get it, I tell you it's good. The price opened here at this top of the body of the candle. All right. And it went up here. As at the time it went up, what do you think the color of the candle will be? The color will be what? Green. It's just like this one that is forming now. Look at this one that is just forming here. When it's going up, the body will be showing green because the market thinks it wants to go up. But instead of going up, look at it, it began to come down. And when it came down, it closed at this place. The level at which it closed will be the opening price of the next candle. So because it closed here, look at where this other candle started from. So if this candle went down, it will have been red, but this candle chose to go up. So it is green. So for a bullish candle, guess what? I'm sure you know by now that opening price is the price at the bottom of the body of the candle. This is the opening price, while the closing price is the top of the body of the candle. Again, for a bullish candle, opening price is the bottom of the body. This is the body of the candle. The body, the wick. But opening price is the bottom of the body of the candle, while the closing price is the top of the body of the candle. Now, when this candle closed, you see it closed at the top here, and another candle started exactly where it closed. Now, what happened to this candle? This candle on its own decided to go down. So when it went down, remember, for a bearish candle, I'm sure you are noting this down. For a bearish candle, the opening price is the price at the top of the body of the candle, while the closing price is the bottom of the candle, of the body of the candle. It closed here, another candle opened here again. And as it opened, this one decided to go up. So on and so forth. This one look at the opening of the body of the candle here. This is the closing. When it closed, another one started, and this one still chose to go down, going down, which makes it what? Red, or any other bearish color that you have chosen. So, excuse me, this is how this thing continues to form. You can see it was in our presence here, and we were discussing when this candle began to form. You see, this candle formed. This particular one, you remember, I was using for an example here. It started and it went up, closed. This is a 5-minute candle. It's closed here. So the opening price is this bottom here. The closing price is the top of the body of the candle. And what happened? It opened, and when it closed, if you check your time now, you will see that this is about whatever your time is. You see that it's about 9:05 or 9:10. This one we play. This one now, this candle, the next candle that is forming here, you're going to see that candle. This is going to be going up and down. If the bulls win it, you will see it will go up. If the bulls win. But if the bear wins, it will go down and it will be red. In 5 minutes, by the next 5 minutes now, this candle will close. Another candle will begin again. And that is how the cycle continues. That is what you need to understand about candles. Now, the next thing that I want to explain on the candle itself is that when price goes up, the peak, the wick of the candle at the top here is the highest price that price got to, and the bottom is the lowest price that price got to. You see, when in a trade, when profit is declared, before profit is declared, there will have been profit and losses in the body of the candle. In this body, profit and loss in the body of the candle, depending on the price that fellow is taking. Now, let's look at something here. If I take the this one now, if I decide to pick the daily, if I pick the daily here, I click on daily, you can see. Do you know the effect? What is causing this week? Remember when we looked at this thing the last time, this body here there was no wick. But did you see that the other 5 minutes candle is going up? That's the body. That's why this body is now moving upward. You see the small wick here. This is just as a result of what? What is happening? What is happening here? Can you see? You see this one is going up. It's going up. And because this is going up on the daily candle, can you see that this wick here is increasing because the price is moving up? So at times when you trade, the day could close here. When it closes, if you are still in that trade, oh, you have a drawdown or whatever. If if you are selling, maybe if you are selling and the candle body begin to move up just as the market is closing, even though you have not closed your trade, the market moves up. Oh, I have a drawdown. Oh, you'll be waiting that let the candle come down so that it will close down. But unfortunately, the candle closed up. With that, you will see yourself, oh, there's a drawdown to this level at this day. Now, the next day, you could be fortunate that the price of the market will come down and hit you at your take profit before going up again. But whichever, know that it's a cyclic something. It continues to move in this pattern. And it is moved by various things, technical analysis and fundamental analysis. All right. So with that being said, let's go back and look at, this is a typical candle, just as we have said. This is showing the bullish candle and a bearish candle. The bullish candle, and because we have more bullish candle, what happens? The market is going upwards. The market is going upwards. All right. So that brings us to the end of the candlestick, introduction to candlestick. Now we still have the candlestick patterns. How do you use these candlesticks to trade? We're still going to be looking at that, the directional method of using candlesticks to trade. But for now, there's an aspect that you need to also understand, which is pips identification. How do you identify pips? How do you understand the pricing in the market? How is the market priced? So I'm going to explain this, and we also go on the chart to try to figure it out. Now, when you see the price in the market, the price, you remember that we said that currencies goes in pairs. They go in pairs. Euro, USD, JPP, GBP, JPY, Euro, NZD. They are always going in pairs. Now, what does this mean? Euro, USD. If you go and check something out, how much is Euro exchanging for the USD? Note something. There's something that I want you to note. Please, when you see Euro, USD, I remember telling you in the other class that Euro is the base currency, while USD is the quote currency. Euro, USD. Euro is the base currency, while USD is the quote. In this case, USD is the base currency, while JPY is the quote. So the one on the left is always the base currency, while the one on the right is the quote. Now, how did they get this 1.13 something? What this simply means is this. How much is Euro exchanging with USD? Now, you know that Euro is stronger. Euro has more value than USD. So let's say I'm not being, depending on the time that you are watching this in your own stuff. Now, this could be, let's say something like, let's say I want to put something, just let's put for the sake of putting figures. You see, when you understand all this, it helps you a great deal. So let's say Euro is 4, is there. Let's say dollar is 3. Now, if I want to exchange, somebody wants to buy Euro to the dollar. I'm just putting these hypothetical figures. If I divide 4, if I divide it by 3, you know, this is going to give me 3 year 1, 3 year 1 point remaining 1, right? That gives us 10. Then 3 in 10, 3 remaining 1, and this 3. So I have 1.3333 something. So what the figure you are seeing here is telling you that the euro weighs higher than the dollar. The euro weighs higher than the dollar. And that's why you see it at 1.13215. This is not the value now. Remember, this is just for the class illustration. Now, when you look at this, how do I understand the pips? So you will hear people will tell you, I made 4 pips. I made 20 pips in the market. How is this pips calculated? Let's quickly look at it here. Let's look at it. When you see the price in the market, you will see 1 point. There are some brokers that will give you 5 digits after the decimal point. 1, 2, 3, 4, 5. 5 digits after the decimal point. Some brokers just give you 4 digits after the decimal point. But in most cases, you will see about 5 digits after the decimal point. Now, each of these means something. Let's take this 5. Now, what is the meaning of pips anyway? Pips means points. Is it percentage in points or points in percentage? Wow. I think it's points in percent. Sorry, I should have looked that up. But you can just check it out. Pips, percentage in points or points in percentage or something like that. That's the meaning of pips. All right, but that's what we use to measure the distance of prices in the market. So let's percentage point value. Sorry, I will get the full stop. I take it for granted. It's quite a long time. We just use pips. Now, let's look at this. If you have 5 digits after the decimal point, provided it is not a JPY, it is not a JPY pair, the last digit is considered as pipette. Pipette or pipette is pipette, all right? Pipette. Now, the number 4, the 4th digit after the decimal point is known as pip. This is the pip. Pip starts from here. So you count 1, 2, 3, 4, 5, 6, 7, 8, 9. When it comes to 10, it comes here. So between this 1 here and this one, if this is 1 and this is 0, then we can say this is 10 pips. But this that you are seeing here now, this is what? 21 pips. Remember, I counted from the decimal point, the 4th digit after the decimal point. That's where you begin to count. So if this is 1 point, remember when way back in school, when we did 100, tens, and units. Remember the units? So this can be called the unit. This can be called, this is the unit. This is the tens. This is the 100th. And this is the 1,000. I think that will make you to get that. All right. So this is 1,000. So this is 1 unit, which is 1 pip. So if it goes higher, we can have up to 10 pips. So we have unit, a pip can be between 1 to 9 pip. But when it goes to this side, it becomes, you can start from 10 to 99 pips. To 99 pips. 1 more pip added to it will make it 100. So guys, this one now is 321 pips. And then if I take it from this side, it's 1,321 pips. Let's go look at it in the real life, market. All right. Let's go look at it here. All right. Now I want you to look at something here. Just observe this. My cursor is at the extreme here. Okay. I think I'd rather use let me use the mobile. Let me use the mobile phone. Okay. All right. Now we're looking at this. This is my phone. This is my mobile phone, right? This is my mobile phone. I'm going to go. We're still going to learn the MT4 and everything, but let's just get these aspects first. So here, let's say, okay, that's what I wanted. All right. If you look at this, let's look at the top, the very top. At the very top, you see Euro USD. Euro USD. You can see various pairs there. Euro USD, Euro JPY, GPP USD, GPP JPY, USD CAD, and so on and so forth like that. So here, let's say on the Euro USD, look at the Euro, we are considering this Euro USD. Yeah. Okay. Remember, I told you something that some brokers will show 4 figures, some show 5 figures. Now, the first number here, 1.0808, the pipette is the third one, is that one that they put at the top. Some will write it fully, but no, whichever way, just know that that's what it represents. That small one, you are most concerned with the 4 after the decimal point. That's what you are most concerned with. So here you can see 8 as the 4th digit. 8 as the 4th digit there. So that is the first pip. That's the first pip. So it continues to go. As it continues to go, we have the bid price, we have the selling price. The bid and the selling price. So this is the bid price, whilst this is the asking price. This is the asking price. Now, the difference, guys, please watch this. Watch this. You can see this. There's something they call spread. There's something they call spread here. You can see the spread. This is very powerful. This spread, the difference between the asking price, the difference between the bid price and the selling price, the bid price and the selling price, the difference between the two of them is what we call the spread. So you will hear that, oh, the spread of this broker is too high or the spread is low. So when you take up your MT4, when you take up your account, you want to know what the spread is like. Is one of the things that you should be, it can determine whether you are making money or losing money with a broker. So you see this price now, 10806. You see that last digit, 6. Before that, the 9 on top of it is what they call the pipette. But as small as it is important because it has to count to 10. You can see 6 has changed to 7 when the counting reads 0 there. So as price is moving, it is moving. So the difference between the asking and the bid price, I told you, is what you call your spread. But there's something that you want to look at this. Look at everyone that ends with USD. Everyone that ends with USD has 1, 2, 3, 4. Look at this one, GBP USD. You can count it 1, 2, 3, 4 from after the decimal point. Look at USD card, 1, 2, 3, 4 after the decimal point. USD CHF, 1, 2, 3, 4 after the decimal point. USD JPY. Now, why is this 1, 2 instead of 4? Why is this 1, 2 instead of 4? Why is this one also 2 instead of 4? Whenever the pair ends with JPY, it is 2 digits. You consider the first 2 digits after the decimal point in the computation of your pips. Again, when it is ending with JPY, you consider the last 2 digits after the decimal point. So you can see USD JPY. This one now is what? We can say this is 84, although we have to measure it from a distance before we can say it's 84. This is not 84 pips. You have to be measuring from one distance to another before we can say it is 10 pips or 20 pips. Now, we are going to do something now, which is very, very practical. I want you to pay attention in the computation of these pips. Is there any other class I'm going to take that? No, I think it has to be in this class. Now, look at this. Okay, I'm going to clear this. Stop sharing this. Let's go back to the laptop. Share this. Okay, let's pay. Look up here now. We are looking at pips. If you look at, if the price of a pair, a Forex pair, is 1, 1, 2, 3, 5. Let's say I bought it. I bought price. I bought that maybe Euro USD is going up and I bought it at, this is the buying price. I bought it at this price. All right. And then when it goes up, I now sell it. The selling price is 1.1257. 1.1257. If I'm going to ask you, how many pips did I make in this trade? Because you see, in the market, we measure your performance by the pips that you made or you lost in a particular trade. So if that means market price was going up, the market price was going up, I bought at this price and I sold at this price. So how many pips? I want you to take your pen and your pen and paper and do a simple calculation here now. This is simple. I want everybody on the call, please make sure you are doing this. It will help you when you don't say, well, when I will do it later. Do it now. Do it now. Pick your pen. And I want you to drop your answers. I want you to drop your answers in the chat box. How many pips is this? How many pips? The difference from this point to this point. From this to this. How many pips? Okay. Somebody said 22. Are you sure? Are you sure? Calculate it again. Calculate it again. Are you sure? 22 pips? Wow. Yes. Put your answer in the chat box. All right. Wow. Mommy Sarah. Wow. I'm glad you're getting this fast. I have you so much in the mind that I hope you're getting this. I'm happy for that. Now, let's go. Now, thank you. 22 pips. How did we get 22 pips? We just said 1.1257. For those of us that did not get it, this is a selling price, all right? It's higher than the buying price. So let's put it here, 1.1235. And we do the simple subtraction, all right? This is 7 minus 5, 2. 5 minus 3, 2. This one is 0, 0, 0. So it's just 22 pips. 22 pips. Awesome. Now, very good. I'm happy a lot of us got that answer. Now, let's do something. Let's take it further. If I buy I take a buy on Euro USD at 1.1359, and I made a total of 62 pips profit, a profit of 62 pips, profit of 62 pips, profit of 62 pips, profit of 62 pips. What is the selling price? Fastest finger, please. This is the price that I bought. This is the price that I bought. I bought at 1.1359 and I made 62 pips profit, 62. So what is the selling price? What is the selling price? What is the selling price? Quickly, everybody, fastest finger. Everyone, it doesn't matter when you are listening to this now, put your hands on paper. Make sure you are doing this right now. Once you do it, you get it. I tell you, that is all. Get it done now. Everybody, let's go. What is my selling price? If I bought the price is going up, and I bought the market when it was 1.1359. I made 62 pips profit. That means I sold at what price? What is the selling price? What did the price get to before I sold? Everybody, let's go. Fastest finger. Let's go. I'm here to see any answer here. We bought at 1 point. This is a practical thing. I told you we'll be doing some little practicals today. So I'm sure you are prepared for that. Okay. Oh, somebody said Ibrahim. Ibrahim said 1.9. Ibrahim said 1.9. Ibrahim, I want to know how you got your 1.9. Can you calculate it again? Okay. Mommy Sarah said 1.421. 1.4. Mom Sarah, remember it has to be in 4 digits. 4 digits. 4 digits. All right. Mr. Demola said 1.1421. 1.1421. Okay. Salah said 1.14. Okay, 1. Oh, Godwin Lawrence. Wow. Okay, Sebok said 1. Let's see. What you just need to do is to add 62 to this, the last 2 digits. So when we add it together, 9 plus 2, this is 1. You take 1. This becomes what? 6 plus 6, 12. You write 2. All right, and take 1. So we have 4 here. We have 1 here. And then we have 1. So if you got 1.1421, bravo. Awesome. That is great. That is 62 pips. So your selling price. Now, let's do something on the other hand. Let's take a reverse angle to this. Let's take a reverse angle. I tell you, once you get this, practice it, you are good. Now, let's say the price of this market, I put, the price is still the same, but this time I made a loss of 115 pips. Loss. I made a loss of 115 pips. Did the market go up? I bought the market, but I made a loss of 115 pips. That means the market went against me. What is my price? What is my selling price? If I bought it at 1.1359, at the same price, 1.1359, this is the price I bought it, and now I made a loss of 115 pips. Now, at what price did I close? At what price did I close it? What price? Fastest finger, quickly. Let's go. Okay. Isibok said, wow. Okay. Ademola said 1244. Godwin said 1244. Isibok said 1244. Lawrence said 1244. How did we get 1244, guys? How did we get 1244? We said 1.35. 1359. Don't worry, I'm trying to use this to write 1.359. Then you count this 115. So I'm going to these are 3 digits. I'm going to take it from the last one. So I put 5 here, I put 1 here, I put 1. Since it said is a loss, that means I will minus it, I will subtract it. Wow, Mommy Sarah, here we go. The medal goes to you. 9 minus 5, this is 4. 5 minus 1, this is 4. 3 minus 1, this is 2. And this is 1.1. Bravo. If you did 1.1244, that is the correct answer. Why? You remember I said I bought at this price and sold it at a loss. That means I sold it at a price lower than the price I bought it. Awesome. I think that is very clear now. So we're going to do one on the JPY. I'm going to do one. This one could be tricky. I'm talking about USD JPY. Now, if we bought at 143.329, this is the buying price. This is buy. We buy here. All right. What will the price be if we sold and made 62, the same 62 pips profit? 62 pips. 62 pips. 62 pips. Remember, look at 143.329. That is the price that we bought. USD JPY, we made 62 pips. So what will be selling price? Selling price will be what? Fastest finger now. Let's go. Let's go. Fastest finger. Selling price will be what? The selling price will be what? What is the selling price? We bought at 143.329 and we sold and made 62 pips profit. What will the profit be? What is the selling price? What is the selling price? What is the selling price? Wow. Ibrahim said 1.43.391. Okay. Mr. Demola, you agree with that? Check it very well. Check it very well. Check your answer. Check your answer. Wow. I wish I had announced a price for this. Okay. Wow. Mommy Sarah, you are on fire tonight. Okay. Now let's quickly go. Thank you, Mr. Godwin. Everyone, let's go. Remember, I said something that when it comes to JPY, you consider the 2 digits after the decimal point. This is the pipette. It is not relevant. It is irrelevant. The pipette. We are considering pips here. So what do we do to get our selling price since we made profit? So it's 143.329. All right. We add 62 pips. So it's going to come here. 62 will come here. 62 will come here. It's not going to start from this one because this is the pipette. So if you add it here, this will still be 9. So 2 plus 2 is 4. 3 plus 6 is 9.143. Oh, my. So if you got your answer to be 143.94 or 143.949, you are correct. Inseborg, you want to check it again? Check your answer again. Check your answer again. Lawrence, you want to check your answer again? All right. Godwin, you are good. Madam Sarah, you are good. Ademola, you check your answer again. Ibrahim, check your answer again. All right. Okay. So I think we're still going to be having more of these exercises as we go on. So, but I think that lays the foundation for you as far as that lays the foundation for you as far as understanding the pips and pips value is concerned. This is what we have just treated. Now, the other part that we'll be treating, but that is going to be definitely in the next video. We are going to be addressing that in the next video. So you want to make sure that you watch this again and again. So in this lecture, we were able to consider the candlesticks and the behaviors of the candlestick, what the candlestick stands for. And we looked at the various components of the candlestick. We were also able to explain pips numbers, identifying the pips and things around us. All right. Now, the next thing we're going to be talking about is how to calculate lot sizes in the Forex market. How do you calculate? What is lot size? What does it mean? Definitely, we'll be looking at that in the next class. I want to say a big thank you for the time taken on this call. I hope it has added value to you. Make sure you watch video 1, 2, 3, and then before you go to the video for the lesson 4. Thank you for being part of this. God bless you. See you at the very top. Bye-bye.
Waking up at dawn, light breaking through, chasing dreams, no time to lose. In this race we strive and grind, motivation fuels the mind. Gonna rise rise up, we won't fall. Breaking barriers through it all. Step by step, our journey's clear. Success is close, and don't you fear. Challenges we face headstrong in this rhythm.